Alright guys, welcome to Stamps FX. We're finna hit you guys with another extremely secretive strategy in this video. So in this video, we're going to talk about a moving average strategy that you can use to potentially gain 60 to 100 pips per day. We're going to look at the 70 period EMA. We're going to wait for a cross and a pullback, and after the cross and the pullback, we're going to take that trade about 3 times. So we'll say we'll trade about 3 times, same setup. And also on the pullback, we will get in. Let's put in a step where we get in if it comes within 10 pips of 70 EMA. And we will revisit this, but I just want to put these here as some general guidelines and steps. All right, so first what we need to do is let's grab the pen tool. So this is what you guys will see. You guys will see the 70 period EMA. It'll do something like this. Come down, it'll come down, go up, and then it'll trend down. So this line here is the 70 EMA right here. All right, so next what you guys will see price do is price will begin to hover and channel to a channel, then price may come up, break above the 70 period EMA, touch the 70 period EMA, bounce, touch it again, bounce, touch it again, bounce or hover over and go below it. Then you'll see it come back, test it. It may come back all the way back up, test it, come back, and then you'll see it hover over again and do the same thing. Bounce, bounce, hover over. So the strategy here is to wait for the price, of course, to breach or go above the 70 period EMA. We would not trade it there. However, we do wait for a pullback or a retest. So we'll break and then it pulls back, and then at that point we get in right here, or if it's within 10 pips of this area, and then we get in and carry the market higher. And we'll do this on the hourly chart, and then we'll do it a second time higher and a third time higher. So we will do this about 3 times. All right, after the move, after the candlestick or price begins to trend above the 70 period EMA and bounce back down to the 70 period EMA right here, we'll jump in, take our 30 pips or so. I usually grab 30 to 40 pips, and I usually do that 2 or 3 times every single time. And usually that's you can usually get 3 trades, 3 30 pip trades in a single day. So that's 90 pips. So that's the strategy right here. 70 period EMA, cross and a pullback. So if price crosses above, pulls back, that's when we enter. We would also enter if price crosses and pulls back, but it doesn't touch this line. It's only within 10 pips of the line. And then we're going to take this trade about 3 times. So bounce, pullback, we'll take it, pullback, we'll take it, pullback, we'll take it. And usually, and the reason I say 3 times, if price came down and we're in the trade, then it comes down again and we double up on this trade, that would count as 2 times. But the reason why I say on the third pullback, that would be the last trade, because usually after the third pullback, price begins to break in the opposite direction, as we'll see in just a second. All right, so now let's flip over to our chart here. So we're on an hourly chart. This is GBP USD. And as you guys can see, let's grab, okay, so here price close above, it trends up, and then right here would be our first trade, because you see this candlestick wick right here came within 10 pips of the moving average. So it's about 3 pips. So it's heading down close. We would enter a trade here. Let's just put the line here. We'll say we enter a trade here. Now the next trade, I don't know how this bar played out. I don't know if I know price came up and it opened here, but I don't know if it went down first or came up first. But either way, the bar is here, and let's just say it went up and then came down. We would get in again at this point right here. I mean, if we're watching it closely and it's moving kind of fast toward this, if it's moving kind of fast over this 70 period EMA, then yeah, we can take it and get in up in here, but we want to try to grab it right here. So at this point, we would be in this trade. We would pretty much be in this trade twice. We'll get in here, and this trade would probably still be on or active, and then we would get in here as well. So we would have 2 positions on at this point, and on both positions we are looking for 30 pips. And as you can see, we would have grabbed the 30 pips. Hour later or 2 hours later, 30 pips there, and then from here up, of course, that's 40 pips, but yeah, we could have grabbed our 30 pips here as well. So very easy. And then this will be our last trade right here. Price comes down, touches, we would get in right here, and or 10 pips. You can, I mean, when price comes down, if it's kind of hesitating and you think it's going back up, you can grab it here if you wanted to, if that's, you know, if you think price is starting to reverse. But as long as it's 10 pips within the range, we can grab it and get in. But I like to wait for it to hit this area right here. All right, and then go up 30 pips and we're out. Now if this candle is steady, still going up pretty healthy and quick, then we can wait for it to go up and then start pulling back, and then we can catch 40 pips or 45 pips or whatever it is we wanted to. All right, so that would be our 3 entries. Now you see price came back down and did it again here. Price also got close here at this point right here. The only problem with this bar right here, or this wick and this wick, is you don't know if price is going to come all the way back down right here, or if it's going to stop and go higher. I mean, nobody can predict where the market or price will actually turn around immediately. So if this is coming down right here, I would pretty much sometimes suspect that it would come all the way down, and sometimes it don't and goes back up. But this right here for sure hits this candle right here, and then this is another trade right here. So we would have been in 2 positions once again and take the market higher. 30 pips would be our take profit. Now in terms of stop loss, as you can see, the drawdown on any of these trades, even this one, if we would have got in here, it's usually not more than 15 pips. So I usually just look at it as if I'm taking 30 pips or more, but I'm taking 30 pips, so make the stop loss at least 15 pips. Also, if you get in the market early, so if you're here and the market comes down 10 pips and you want to jump in, then you may want to look at that and only take 20 pips. You know, if you're going for, if you're doing the 30 pip take profit, you may only want to take 20 pips because you used up, I don't want to say used up, but you got in the market 10 pips late. So instead of being down here, you're now up here 10 pips. So just take the market 20 pips, and that will be the same as getting in here and taking the market 30 pips. So anyway, I hope that didn't confuse you guys, but let's take a look at some of the others. All right, so now prices came down, come down to this level, broke through, and now we have a retest to the downside. So now we get in here, and the drawdown here would be about 10 pips, so we would still be good there. We would take the market 30 pips, which would be almost at this level, but we would definitely hit 30 pips up in this area right here, and you can see it came all the way back down 63 pips. But always just grab 30 pips. As you notice, when this came down and popped back up, it touched this area multiple times. So I would have probably jumped in this trade twice and only risked 30 pips because, and I say 30 pips because it would be in the trade twice, and it would be a 15 pip stop loss for each trade. And so grab it here and just hold it and wait for it to hit my 30 pips for each trade. So there would have been 2 trades, 30 pips each. That would have been 60 pips. So you can see these are all different days right here. So the 26th, we would have came out with about 90 pips. This day, we would have came out to, assuming that we didn't miss this trade, we would have got our 30 pips here. But this was rushing up so quick, you could have easily got in here, Now you're in a double trade. As the market starts coming up, you can stay in the market until it starts riding it back down. And if you see it pulling back and forming a wick, then you could jump out. So you probably could have pulled off about 35 pips on this trade. So that would have been 70 pips here. Same with this day right here. Market comes down, retraces here. Now we're looking for a bearish trade. We could have stayed in this position. Let's see, our 30 pips is on this candle right here, but you could have waited until the market appeared to be pulling back and grab 35 pips on this as well. So that's pretty much the strategy. And if you just take a look, let's just take a look. I don't want to make the video too long, but just take a look up through here. Look at this. Price breaks above, it pulls back right to this area right here, an easy 30 pips. Now I'm using 30 pips because this time period right here is very volatile. So you can probably get more than 30 pips out of this time frame, but you don't necessarily have to grab 30 pips. You can grab more than 30 pips if you're willing to take more risk. So for example, all of these trades went about 50 or more pips. Honestly, I mean, if you look at this move was insane. This is 80 pips. If you look at this right here, this was 60 pips. So all of these trades have went way more than just 30 pips. All of them. Yeah, so the trade doesn't work every single time, but it is good to grab your 30 pips and set your stop loss at 15 pips. So when you have these huge days to where you're making 60 pips, 60 pips, 60 pips, or even more, 60 to 90 pips, or even 100 pips on these individual days, when you lose 15 pips or even lose 30 pips, it's not a big deal because you've collected so much over the last few days. So guys, that is the strategy. Be sure to like the video, because what I'm going to do next is I'm going to take this strategy and some of the other strategies we talked about, and we only talk about these strategies because I want to show and explain the strategies to you guys. I want to take some of these strategies and I'm going to trade it on a live account with a very small amount of money, and I'll grow that account, but I want to show you guys how the trade would play out in real life on a real chart. So alright guys, thank you for watching the video. Be sure to like the video and subscribe.